Palantir stock soars. Q2 beat raise Propel shares to record high. Hold on to your hats. Palantir stock isn't just hitting new highs. It's shattering records with a head-spinning 9% surge to $175.95 as Wall Street debates whether its AI-driven growth justifies a valuation that's left analysts scratching their heads. Let's unpack the fireworks behind this $1 billion revenue juggernaut. The spark came from Palantir's blockbuster Q2 results, where the data analytics giant delivered a triple whammy. Crushed earnings forecasts, 16 cents versus 14 cents expected. Obliterated revenue projections, $1.01 billion versus $938 million estimate, and showcased AI-powered revenue acceleration that's leaving many bullish on its future. U.S. government contracts soared 53% to $426 million, outpacing the $392 million analysts anticipated, while commercial deals skyrocketed 93% to $306 million, nearly $40 million above expectations. But here's where it gets controversial. Investors are torn between cheering this growth and sweating the valuation. While Wedbush analyst Daniel Ives praised the exceptional commercial division growth, with contract values up 222% to $843 million, Jefferies' Brent Thill highlights the red flag. Palantir trades at a nosebleed 74 times projected 2026 revenues. Even with stellar 55% growth, Thill warns, current prices would require a 2028 revenue multiple of 25 times, questioning how sustainable this premium is. The real lightning rod, however, is AI. Palantir's pivoting from government defense to generative AI apps in healthcare, energy, and manufacturing. And it's paying off. Customer counts leaped 64% year-over-year. Banks like BOA note, as Palantir arms enterprises with tools to operationalize AI. Citi's Tyler Radke calls this Q2 a barn burner, with profit margins reaching record highs. But Deutsche Bank's Brad Zelnick, upgrading to hold from sell, still struggles. We were late to see Palantir's unique AI positioning, he admits, but valuation feels disconnected from reality. Yet the technicals tell a different story. Palantir sports a perfect 99 composite rating per IBD, with institutional accumulation running strong, B grade. Shares have surged 111% this year, solidifying its status as the SP's top 2025 performer. So, does Palantir's breakneck growth warrant its sky-high sticker price? Should investors cautiously celebrate this AI leader, or is the valuation a ticking time bomb? The debate rages. What's your take? Palantir's massive revenue growth, a tech revolution in the making. Palantir stock is on fire. A whopping 8% surge on Tuesday morning, and it's all thanks to their impressive revenue growth. The software analytics firm just reported a massive 48% increase in revenue for the April-June quarter, hitting the $1 billion mark for the first time. That's a huge deal, and Palantir CEO Alex Karp is rightfully proud. He says there's no authentic way to be anything but proud and grateful for these extraordinary numbers. And it's not just the CEO's enthusiasm. The numbers speak for themselves. U.S. commercial revenue nearly doubled, a staggering 93% increase, while U.S. government revenue grew a solid 53%. Overall, the company saw a 68% growth in the U.S. market. Karp even goes as far as calling it an American revolution. Palantir is expecting another $1 billion in revenue next quarter, which would bring their full-year revenue to a projected $4.1 billion. This is just the latest win for Palantir, which recently secured a $10 billion decade-long contract with the U.S. Army. Palantir is riding the wave of the AI boom, and they're not alone. Tech giants like Microsoft, Meta, Google, and Apple are all investing heavily in AI infrastructure, with Microsoft stock popping last week after reporting $75 billion in annual revenue from its Azure cloud platform. The race to dominate the AI space is on, and these companies are leading the charge. But here's where it gets controversial. Is this AI boom sustainable? With such massive investments, are these companies setting themselves up for a potential bubble? And this is the part most people miss: the impact of AI on society and the economy. As these companies continue to innovate and push the boundaries of technology, what does it mean for the future of work and our daily lives? These are the questions we should be asking as we witness this AI revolution unfold. What do you think? Is the AI boom here to stay? Or is it a temporary hype cycle? Share your thoughts in the comments. Let's spark a discussion.